So now that we know how to access financial data through various methods, we are going to take that information and now apply commonly used financial indicators to our data sets. Keep in mind that in this course, again, we're not here to discuss in depth financial indicators. We're not here to discuss in depth exact patterns in which I would recommend you to use. I think these are things that I would recommend you consulting financial courses for, things that, people have a lot more expertise than myself. I mean, we're here to teach you how to create these indicators and apply them to your Python code so that you can create your own custom interfaces. So today I'm going to choose a few of the most commonly used ones. I'm going to give you a small description of what they are, but then really if you want to learn more about them, I suggest you utilize the links I found here, do some Google searching, and really look up what those metrics can do for you and how they can help you to analyze trading patterns. So the three that we've chosen for this course are going to be the Relative Strength Index, the RSI, the Moving Average Convergence Divergence, or the MACD, and then lastly the Stochastics Oscillator. So starting with the RSI, this is a momentum indicator that is really used to determine if the stock is under or overbought by looking at the value of the RSI and indicating whether it's above or below a certain value from 0 to 100. So again, these links that I've included here on the sides, there's some pages that'll take you to Investopedia that actually give you a really good breakdown and description, and then some helpful YouTube videos with industry experts that do a great job breaking down each of these. The next one, the MACD, is a momentum indicator that is consisting of a faster and slower moving average, so the MACD and the signal line that are used to optimize those entry points. So when they cross over, it's generally indicating a buy or a sell opportunity. And then lastly, our stochastics oscillator is another momentum indicator consisting of two lines that really helps you kind of do something similar to RSI and the MACD to help you really look at those under and overbought situations and also looking for price shifts and entry points. So it's important to note that a lot of people utilize multiple indicators to have those entry and exit points. They allow them to confirm each other rather than just relying on one to the other. Even in my limited experience, as much as I say I'm not a financial expert, I do try to utilize three or more and then even different ways of analyzing those indicators for my own unique trading patterns. So a successful completion of this section would allow users to confidently create functions that will calculate the financial indicator of your choice. So not only do I want you to take these three, utilize them in our examples, but I want you to be able to go back and find your own, be comfortable putting that code in, passing it from there, the function, or calling that function rather, and passing it that data series or a subset of that data series so that you can calculate that metric that you desire. And then lastly, appending that new metric to your data sets that we created in our last section. So excited to jump into this section with you guys again. This is a core piece of what we're going to learn. So please, as you go through these live examples, feel free to play with them, but also feel free to go grab your own and try to create them. It's something, we've tried to make this program as flexible as possible. So if you want to add these into your code and into your dashboard at a later time, I think you'll see that you're going to gain the confidence to be able to do that as we continue through this course.